Hi everyone, welcome to this session of the Tiger Academy, US Stock Financial Statements for Beginners. In this session, I will walk you through 3 advantages of learning financial reports of US stocks. As a new investor who are just starting out in investing, knowing how to work with the numbers in a company's financial reports is an essential skill for stock investors. You'll be able to discern a company's investment potential based on readily available sources of information. This will allow you to identify information that is a key skill for any investor wanting to make smart investment decisions. You may think that financial reports are difficult to begin with, let alone those of US stocks. But I can assure you that you don't have to worry at all. The financial reports of US stocks are actually simpler and more straightforward of stocks in other countries. In this session, I will walk you through the 3 advantages of learning financial reporting of US stocks. Firstly, short-selling mechanism is generally considered an indispensable part of the US stock market. The short-selling mechanism of US stocks is the sword of Damocles hanging over the heads of listed companies. What do I mean? If a listed company in the United States is exposed to a financial fraud scandal, investors can short the company's shares through securities lending or by using put options. Moreover, there are professional research institutions such as Muddy Waters, which mainly focuses on short selling. They will act upon the financial scandals of listed companies and carry out short selling when opportunities arise. This will allow them to profit with the downfall of those companies. Therefore, with the short selling mechanism, very few companies listed in the United States dare to fake their financial reports. That's why the quality of the financial data in the US is generally better than the data in elsewhere. Second, the US stock market has higher penalties for financial fraud. Have you heard of the Enron scandal in 2001? This is known as one of the largest financial fraud cases in American history. Enron was fined $500 million by the Securities and Exchange Commission. Its shares were delisted, and the company declared bankruptcy. CEO Jeffrey Skilling was sentenced to 24 years in prison and fined $45 million. Andrew Fastow, the mastermind of the financial fraud, was sentenced to 6 years in prison and fined $23.8 million. Moreover, the 3 major investment banks involved with Enron were also severely punished. Citigroup, JP Morgan Chase, and Bank of America were found guilty of financial fraud and paid compensation of $2 billion, $2.2 billion, and $69 million, respectively, to the victims of Enron's bankruptcy. It can be fairly described as a catastrophe. After the Enron incident, listed companies in the United States would rather delist than commit financial fraud, as the cost to the company is simply too high. Third, the volatility of emotional trading in US stocks is low. What is emotional trading, you may ask? Let me give you an example. Mr. Qingwei Chen, Director of Investment and Research of Tiger International, made a calculation. If you invested in an S&P 500 index fund and a CSI 300 index fund with a net value of 1 in January 2002, its trend will be as follows. Over the period from 2002 to 2019, the S&P 500 index rose gradually and persistently, while the CSI 300 index fluctuated like a roller coaster. Which of the 2 funds will you choose to hold for the long term? Over the period from 2002 to 2019, investments in the S&P 500 index and the CSI 300 index generated similar level of return, but the process is completely different. Over this period, annualized volatility of the CSI 300 index reached 28.64%, while that of the S&P 500 index was only 14.02%. This means that investment in the S&P 500 index will make you feel more comfortable when investing in the long term, although you get the same return from investment in either index over the same period of time. If we look at the global market, how does annualized volatility of major US stock indexes compare to those of major indexes of other countries or regions over the same period of time? We compiled the following statistics. From the statistics above, we can see that from 2002 to 2019, the annualized volatilities of the 3 major US indexes were relatively low compared with other major world indexes. In principle, the lower volatility, the more comfortable you will feel when holding your investments. Giving 3 advantages above, I am eager to teach you how to read the financial reports of US stocks. For starter, you should choose a market with low volatility and a robust regulatory mechanism. This will make the whole learning experience more friendly. Moreover, in a market environment with minimal distraction, financial reports can play a more important role. Well, that's all for this session. In the next session, we'll begin to explore the 3 financial statements which allow you to examine the core business advantages of a company. Are you ready? I'll see you in the next session.